Welcome to our group presentations. This presentation will be about PNG's financial analysis from 2016 to 2019. This is our group member, and this is the content that we will cover. First is the introduction of PNG's Phú Nhuận Storage Stock Company, better known as PNG's, is located at 170E Phan Đăng Lưu Street, Ward 3, Phú Nhuận District, Ho Chi Minh City. In 1988, Phú Nhuận Jewelry Trading Store were founded under the People Committee of Phú Nhuận District and was officially named Phú Nhuận Jewelry Stock Company in 1992. And this is the website of this company. PNG's independent audit firm from 2016 to 2017 is Deloitte. From 2018 to 2019 is PricewaterhouseCoopers. Both are in the Big Four accounting company. The company and its subsidiaries distribute, retail, and export jewelry made of gold, silver, and gemstone. It also produces and trades accessories, souvenirs, wristwatches, and gold bars. PNG also operates in the real estate sector. So how big is PNG? PNG is the leading company in Vietnam jewelry market. It is awarded with many rewards, such as Asia No. 1 jewelry retailers and the third largest gemstone jewelry manufacturer in the world. Moreover, the company is also appreciated by its customers and usually considered as a superior brand name over other competitors. Over 20 years, the company has always remained its good reputation. The company's ticker symbol is PNG, and the stock exchange on which its share is listed is Ho Chi Minh Stock Exchange. The company has 4 subsidiaries. All of them are 100% owned by PNG, and they are listed in the slide. As this is PNG's board of directors as is shown on the annual report 2019. The board of directors consists of 9 people, Ms. Cao Thị Ngọc Dung as the chairwoman and Mr. Lê Chí Thông as the vice chairman. All of the members all share in the company, implying that the directors care about the sustainable development of the company. What they aim at achieving is the long-term success of the company rather than the short-term profitable achievement. Use other words, the development of the company is the top priorities of the board of directors.
Hi, my name is Nhi. I'm going to talk about the income statement analysis. So first, there are 2 parts. First, I'm going to talk about the income statement of PNG from 2016 to 2019. Okay, so first, I'm going to talk about its area of strengths. So you can see very clearly that the gross revenue and the net income of PNG had developed successively from 2016 to 2019. On the other hand, it had some areas for improvements. It started to gain less on the non-operating activities. It had a major downfall in 2017, and then it slightly decreased over the next 2 years. So, moreover, the earnings per common share of PNG had proven to be very fluctuated. It quickly increased in 2017 and then quickly decreased in 2018, followed by a slight rise in 2019. I want to talk a bit about the difference in the cost structure of PNG. So we can see here that there is a slight difference. So PNG started to raise its operating activities, so it accounted for more on the total expenses. Still, COGS and total expenses had positive relations. However, the distance between the 2 lines are getting widened. And the non-operating expenses accounted for a small part on total expenses, or I will not mention it. Okay, so a little bit, gross revenue and net income continuously increased, gain in non-operating activities decreased, and the common EPS fluctuated. Okay, so now I'm going to move on to the second part, which is the comparison between PNG and its direct competitor, SJC. So some of its area of strength compared to SJC, so even though it recorded lower gross revenue over the times, but it generated much more net income than what SJC could be able of. And the gross revenue of PNG successively increased, while that of SJC proved to be unstable. So under the common size analysis, you can also see that the net income of PNG accounted for a much more percentage of gross revenue than that of SJC, times higher. And also the total expenses of PNG accounted for less percentages over the gross revenue, while SJC the cutter remained the rate above 99% for its total expenses. So this is the comparison of common size, some part of the common size income statement of PNG and SJC. So now you can see the difference in this common size income statement, and this difference, the reason could be from the different characteristics of the product categories that these two firms offered. So according to Beverly Security in 2019, SJC they offered mainly gold bars, which had low gross profit margin, while PNG they mainly offered jewelry, which had much more gross profit margin. So that explains why. Okay, also some area of strength of PNG. Even though it started to gain less on non-operating activities, it had not observed any losses like SJC in 2018. Also, this could be one area for improvement because SJC could be the forecast of what PNG could face in the next years. And also, as I mentioned, because of the difference in the product characteristics, so the cost structure of these two firms are quite different as well. So most of the total expenses of PNG are made up of COGS. Most of the total expenses of SJC were made up of cost of goods sold. The total expenses of PNG had a more balance between operating cost and cost of goods sold.
So next is about the ratio analysis concerning liquidity, long-term solvency, efficiency, profitability, and market value ratios. Firstly, about the liquidity ratios, the current ratios of PNGs over the course of 4 years from 2016 to 2019 all ranged from 1.5 to around 2.6. So since a good ratio varies between 1.5 to 3, according to Investopedia, and the average ratio of the jewelry industry is around 1.5 according to a research in the research challenge of RMIT 2020. So these are good signs of PNG indicating that it does not have many problems meeting its short-term obligations, and PNG also has done a good job in efficiently using its current assets and managing its working capital. So compared to SJC, PNG's biggest competitor, the current ratios of PNG is much more stable. So there are times the current ratio of SJC has extensive fluctuations. As you can see, it's peaked around 19 in 2018, but then plummeted to 6.67 in 2019. Back to the PNJ, it can also be seen that the quick ratio and along with the two ratios are started to plummet from 2017. However, this is not a bad sign, and there are good reasons for that. As a growing retailer, in 2019 only, PNG added 43 stores, bringing the total stores to 346 stores. And inventories in that year account for nearly 96% of its current assets. because to keep up with the increasing demand of such stores, also in 2019, PNJ's inventories rocketed from 2,000 billion Vietnam dong to around 7,000 billion Vietnam dong. So as a result, the quick ratio of 2019 witnesses a nosedive. So the gap between the current ratio and quick ratio is mainly because PNJ's inventories account for most of its current assets. So this is normal for companies in the retail sector because most of their sales are generated from their inventory. And moreover, PNJ also managed to pay more than 4,000 billion short-term debt in 2019 since 80% of PNJ's inventories are gold, silver, and expensive jewelry, which all have high liquidity, so the company does not have many problems meeting its short-term obligations, but can also use its inventories to secure short-term debts. About the long-term solvency ratio, in the recent 2 years, PNJ had a tendency to use debt to finance its business. The proof is that in 2018 and 2019, the debt ratios and debt to equity ratios rose. Besides, over the span of 4 years, PNJ's equity multiplier also had a tendency to decrease. So from such a move, it can be seen that PNJ is using financial leverage to expand its scale and increase its inventories. Though in 2019 this ratio witnessed a rise, but considering the fact that in that year the company greatly expanded its business, increased its inventory, and also the debt ratio continued to grow. So since PNJ's debt ratio and debt to equity ratio have always been quite low, so the strategy of increasing its debts can be considered reasonable. However, the company may need to reconsider adapting to such a tactic when the debt and debt to equity ratio approach the safe limit, because in the long run, the cash flow from operating activities should be positive to compensate for investing activities as well as paying principals and interest. If PNJ keeps increasing, so PNJ has a quite good coverage ratios and terms interest earned ratio. So over the course of 4 years, it can be seen that both ratios rocketed in the first 3 years and only dropped in 2019. However, since both ratios are relatively high, around 50.3 and 15.9 for the term interest earned ratio and cash coverage ratio respectively, the drop in 2019 was not a bad sign. Furthermore, considering that PNJ started to increase its debt in 2018 and 2019 to finance its growing business, which then results in the increased interest expense, so it can still be said that the company had little difficulties in meeting its long-term obligations, possessed high creditability, and had good financial health, and were totally capable of attracting more potential investors. Next, let's take a look at how PNJ is efficiently managing its assets. So about the inventory ratio from 2016 to 2019, PNJ's inventory ratio decreased by around 21.5% from 2.88 to 2.26. So though this made the average ratio of PNJ lower than that of the retailing sector, which is around 8, it is still higher than that of the jewelry industry, which is around 1.4. So moreover, considering PNJ has always accounted for the highest percentage of Vietnamese jewelry market share, it can be seen that the company is relatively quick in turning its generation sales from inventories. Though the ratio took a nosedive, this was not a bad sign because at this time, PNJ added 43 stores in many regions. So moreover, the company also diversified and introduced many exclusive collections. However, it is worth noticing that such moves were nothing but a double-edged sword. Though this strategy aimed at meeting the increasing demand of consumers, since jewelries are not widely consumed on a daily basis, it could backfire and cause losses for PNJ. So if you look at the financial statements of PNJ, the total account receivables of PNJ is relatively low, because the characteristic of the retailing jewelry is to directly conduct transactions and then immediately make the payments in the market. However, since PNJ has been expanding its scale and investing in new products, which are wristwatches, since 2016 until now, which means that more sales are generated and more credit may need granted, so this ratio continued to fall over the span of 4 years.
Okay, so before we go deep into the other information of PNG, first let's take a look at the balance sheet of PNG. So from the PNG standpoint, the current assets and the non-current assets have an upward trending during the past 4 years. In 2019, PNG's current assets have increased by nearly 36% compared to the previous years and 136% compared to the first year, that was in 2016. Along with the increase in the current assets, the non-current assets also had an explosive rise with an increase of 161% from 2016 to 2019. PNG also occurred an increase in the current liabilities, while the non-current liabilities has declined from 2016 to 2017. The current liability declined significantly by 26%, but then witnesses an upward trend with an increase of 80% from the next year. Non-current liabilities also decreased by 18% and 71% in the same period. Despite the opposite trending of the current and the non-current liabilities, the total shareholder equity has an increase from 1.5 billion to 4.5 billion during the 4 years period, which accounted for approximately 3 times higher. Talking about the common side between PNG and HJCs, PNG has the average current asset proportions at a lower point, about 11%. However, HJC's average non-current assets percentage is opposite, with an average lower the same as 11% in comparisons. In the total current liabilities and the shareholder equity section, there were opposite trends between the two companies. In the current liability, the rising percentage of HJCs were 10%, while PNG declined gradually at about 3% every year. The non-current liabilities of PNGs was 0.6 down on average, and HGGs were fluctuated. It dropped from 72% to 40% in 2016 to 2017, and then increased back to 42% in 2018. The percentage of non-current liabilities in HJC structures is a lot higher than PNG also. And at last, the shareholders of the HJCs could not receive as much equity as the PNGs, with a gap at least 32% during 4 years.
Following the increase of inventory, the payable amounts also increased. As a result, the payable turnover ratio decreased over the course of 4 years. For the assets turnover, as you can see from the graph, PNG's average assets turnover in 4 years is rather low, just around 2.58. Yet this is normal since the jewelry retailing sector usually had low assets turnover. In other words, because jewelry is expensive and most customers have a low frequency of purchasing. Another reason explaining this low asset turnover is because jewelry is highly differentiated product. Though one jewelry store may carry hundreds of styles, most consumers will only purchase one out of the whole collection. Because of such reasons, jewelry retailers usually need to have a lot of inventory stock to meet the demand of customers. Simply put, since the main assets of jewelry stores are inventories, synonymous with a slow rate of return, a low asset turnover ratio is one of the most typical characteristics of this sector. However, PNG assets turnover ratio is reducing. In the period from 2016 to 2019, since PNG only raised
98% of sales compared to the 148% increase in total assets. The totalists show a tendency to cut down on its inventory, main source of its assets. Previously, from 2015 to 2018, PNG has always accomplished its goal in sales and profit after tax. However, in 2019, the PNG heavily expand its business and product line. It only gained 7 billion Vietnam dong and failed to meet the expectations of company and investor. In short, PNG's efficient turnover ratio showed that the company has not managed its inventory very well. Moreover, though PNG accounts for a large proportion of the market share, it is having a quite difficult time in reaching the maximum sales from its access. Following the increase in inventory, the payable amount also increased, and as a result, the payable turnover ratio decreased over the course of 4 years. As you can see here, the beginning point and here is the ending point. For the assets turnover ratio, as you can see from the graph, PNG average assets turnover in 4 years is rather low, just 2.58. However, this is normal since the jewelry retailing sector usually has low asset turnover. In other words, because jewelry is expensive, most customers have a low frequency of purchasing. Another reason explaining this low asset turnover is because jewelry is a highly differentiated product. Though one jewelry store may carry hundreds of styles, most consumers will only purchase only one out of the whole collection. Because of such reasons, jewelry retailers usually need to have a lot of inventory to stock to meet the demand of customers. Simply put, since the main assets of jewelry stores are inventory, synonymous with a slow rate of return, a low asset turnover ratio is one of the most typical characteristics of this sector. However, PNG asset turnover is reducing in the period from 2016 to 2019, since PNG only raised 98% of sales. Compared to 140 increase in total assets, the company showed a tendency to cut down on its inventories. Previously, from 2015 to 2018, PNG has always accomplished its goal in sales and profit after tax. However, in 2019, the year PNG heavily expanded its business and product line, it only gained 17 billion Vietnam dong and fails to meet the expectations of the company and investor. In short, PNG's efficiency turnover ratio shows that the company has not managed its assets, or in other words, inventories, well enough. Moreover, though PNG accounts for a large proportion of the market share, it's having a quite difficult time in reaching the maximum sales from its assets. And next, we're going to analyze the profitability ratio of PNG to see how it has been making profit over the last few years compared to its greatest competitor, HEC. And as you can see from the two graphs here, for the profit margin and net profit margin ratios, the value gradually improved over the period of 4 years from 2016 to 2019, increasing from 5.26% to 70.2%. These were the result of PNG no longer making provision for investment in Dong A Bank, and gross profit margin of PNG also improved. Moreover, compared to the two ties of ratio to those of HEC, we can see that PNG completely overwhelmed HEC over the course of 4 years. Such a massive difference actually come down to two factors: their strategy and their business model. In the period before 2012, the gold market in Vietnam mainly focused on consuming gold for the sake of storing and investing, because consuming gold as jewelry only accounted for a small amount of the market demand. However, to stabilize the domestic currency, the government issued some policies to increase the demand for gold jewelry. And in response, whereas PNG quickly shifted its strategy into selling gold jewelry in 2011, HEC still stuck to the old strategy where selling gold bars is the main focus. Though the revenue of HGC has always been larger than that of PNG, since the profit of selling gold bars is quite low, just from 0.1% to 0.5%. Moreover, because PNG also changes its business model into specializing in making jewelries, wristwatches to keep up with the new trend of the market, their profit margin and net profit margin ratios have always been higher than those of HGC, ranging from around 20 folds to even 50 folds. For the ratio of earnings before interest, tax, depreciation, and amortization margin, similar to the part C in the comparison between profit margin and net profit margin ratios, the operating profitability of PNG and cash flows were also way higher than those of HGC. Though PNG performed very well compared to HGC, on average 5 times better, the company may have over-invested in its assets, particularly inventory, in recent years. From 2018 to 2019, considering the company focused heavily on expanding its business, product line exclusive production, PNG needed to stock a lot of inventories. And compared to Doji, Baotimenjiao, and HGC, PNG has the highest ROE. As can be seen from the graph, in the same period of time, PNG's ROE was always in the range of 28 to 32% from 2016 to 2019, whilst competitors were always lower than 10%. Looking closely at PNG, it can be seen that PNG had been trying to improve its ROE through investing in assets financed mostly by equity. Though there was a slight decrease, the overall upward trend showed that PNG tactics were performing really well, since the net profit margin also witnessed a stable increase. From 2016 to 2017, this ratio increased, implying that investors were expecting high growth rates in the future. However, since the profit of quarter 4 2017 reached the lowest of 2017, net income to 2019 decreased about 8%, and earning after tax decreased about 6% compared to the same period of the previous year. The company failed to meet expectations of investors, and as a result, the P ratio from 2017 to 2019 dwindled by around 4%, close to the value of 2016. The last group of ratios that we're going to analyze in today's videos will be the market value ratio of PNG. And for the market to book value ratios during 4 years, it can be seen that the market value PNG's equity cheaply compared to its book value. However, just after 4 years, PNG's market capitalization increased nearly 3-fold. However, the value only grew as a result of the surging number of shares, whereas the price per share is decreasing. In other words, the changes in the value of market capitalization were the results of PNG shares dilution. According to Warhaven Investment Fund, the price per share of PNG has been plummeting recently, leading to the huge losses for the company's shareholders. Furthermore, the fund also believes that PNG's tactic of issuing up to 1.5 more ESOP, or in other words, employee stock ownership plan, also worsened the situation of share dilution. However, President Cao Ting-Yung responded that the decrease in price per share of PNG was not a result from its internal operation. Instead, it was the inevitable circumstance suffered by the retailing sector as a whole. From our group perspective, such a diminishing was not an alarming sign considering the adverse effects of COVID-19 on the overall economic climate. Moreover, the increase in the number of shares and decrease in the price per share do not say much about how well PNG has been doing. Since PNG has been expanding their business scale and investing in a new product line like wristwatch and many other exclusive collections during 2018 and 2019, they needed more capital to finance their plans. Thus, issuance of more shares is critical in this case. After the financial analysis of PNG after 4 years, there are some key conclusions that can be withdrawn. Firstly, since the largest Source of PNG assets are highly liquid items like gold, silver, and expensive jewelries. The company had few problems in meeting its short-term obligations. Furthermore, it can also use such valuable assets to secure its short-term debt. Secondly, since PNG has a quite good long-term solvency ratios, the increase in debt ratio mostly resulted from the financing for its growing business. It could be said that the company also had few difficulty in meeting its long-term obligations, having high credibility and fairly good financial health. For such reasons, PNG possesses high chance of attracting more potential investors in the future. Firstly, considering PNG efficiency ratio, it can be seen that the company could do better in managing its inventory because the figure shows that they might have overinvested. Moreover, though PNG accounted for a large proportion of market share, it was having a difficult time in reaching the maximum sales from its access. Fourthly, compared to other competitors, namely SCG, Doji, and Baotai PNG's stability in generating profit is greater. However, since the company also focused on expanding its business scale, product lines, and exclusive collections, the company also had to spend a lot, and as a result, the shareholders of PNG did not hold a very high expectation of the value per share will rise anytime soon in the future. Lastly, considering the market value ratios of PNG, though the company was undergoing a share dilution situation, considering its heavy expansion, the issuance of more shares is still crucial.